Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. I put together some thoughts and themes for 2024 since we're at the start of the year. Keep in mind that in the short run, anything could happen, so quote-unquote expert predictions are questionable at the best of times, but maybe this video will give you some themes to keep an eye out on over the next 12 months. So the first theme I see is interest rates and inflation. So is inflation behind us? Will the central banks meet the market's expectations of large preemptive cuts? Inflation most recently clocked in at 3.1% for November 2023, down from 5.9% in January. Decreases in interest rates on both sides of the border as inflation comes down and/or the economy slows are expected. This would speed the economy up by making borrowing for spending cheaper and discouraging saving, creating more demand for companies to sell into, and making company debt cheaper to carry, helping out the bottom line. If the rate decreases are because of lower inflation rates, this means a soft landing and good news. If the rates are down because of the economy slowing or going into recession, that would be your bad news. As long as inflation remains above 2%, I don't think central banks will cut rates unless there is a harsh recession, because inflation is much worse than a recession, and that's what the central banks must fight. The Bank of Canada is expected to start lowering its trend-setting overnight rate as soon as it feels confident price increases are closing in on 2% per year, since it takes about 6 to 9 months for the interest rate adjustment to work its way through the economy anyway. The cut could thus happen as early as the first half of this year. Anything with high loans like real estate investment trusts and home builders will benefit. If short-term interest rates come down, the yield curve will normalize and banks will get better margins on their mortgages. We are currently in a period of flux regarding interest rates, transitioning from a prolonged, extremely low interest rate environment with a recently elevated inflation rate to a somewhat indeterminable future. A delicate balancing act is required of central banks to stabilize economic activity without catastrophic consequences. I do not see a harsh recession in 2024, and at most a very mild one because of the low unemployment rate on both sides of the border. I also don't think inflation will be at 2% in 2024, and thus I think interest rates will stay relatively high, with perhaps a few 0.25% rate cuts along the way later in the year. My second theme is technology. While the S&P 500's return for 2023 was 26.4%, the performance of the Magnificent Seven companies, which is Tesla, Alphabet, Amazon, Apple, Microsoft, Meta, and Nvidia, was responsible for most of the returns, as their average total return was 104.7%, accounting for more than 62% of the S&P 500's performance in 2023. Three of the Magnificent Seven companies, Tesla, Alphabet, and Amazon, ended 2023 below their closing price at the end of 2021. Only three, Apple, Microsoft, and Nvidia, outperformed riskless one-month treasury bills, which returned 3.2% per year over the period. Technology has a long-run positive trend since it drives most of the world, but you won't see in 2024 the amazing things technology, specifically those Magnificent Seven companies, did the previous year. I expect a regression to the mean in terms of performance, since the valuations of the Magnificent Seven are very high, with an average PE of 50. And it is very difficult for the highly valued companies to continue to outperform over the long term. The 2023 theme AI will continue to be worked on, but will take more time than a year to show real monetary value and improvement in productivity by the end users. In the general sense, technology always holds the biggest promise, but is not limited to any particular sector. Advancements are accelerating in pace and diversity and now include almost every touchpoint in our everyday lives. From the mundane to the extraordinary, discovery to application, technology remains a key differentiator and, as it has in the past, will have a profound impact on our future. Especially if interest rates come off, I would expect the market's drivers to broaden into other sectors beyond technology, including financials. My third theme to watch is real estate. Residential real estate prices are driven by interest rates. So if interest rates come down, residential real estate will become more expensive as the carrying costs have come down. Many Canadians, when they're renewing their fixed rate mortgages, will face higher rates in 2024. This may lead to a few defaults, but I don't foresee anything significant because Canadians love their real estate and they will make sure that they can keep paying their mortgages. Plus, people were stress tested for higher rates than they were actually borrowing for during their previous mortgage. Commercial real estate, especially lower quality office and retail space, will continue to face vacancies and possible defaults on loans, which can't be carried by a half-empty building. And all of this possibly could have impacts on Canadian banks with some bad loan write-offs. The affected real estate will require conversion to other types of real estate and other creative solutions to change with the new paradigm of people working from home and shopping from home. There is some risk in these specific segments of commercial real estate in 2024, making me avoid real estate investment trusts with heavy exposure to office and retail. Lenders are also taking a closer look at the renewal of loans on the affected properties, since it is possible the property is not able to carry the loan. And if the renewal doesn't happen, then the property has to be sold, usually at a discount. So this can affect the number of properties, but should not be a significant problem in 2024. My fourth theme is bonds. Bonds will continue to make headway in 2024, especially if interest rates are cut. And by extension, so will balanced ETFs and mutual funds. Bonds are supposed to be a hedge against a stock market plunge. Bonds failed in this mission in 2022 because interest rates were rising sharply. Whatever direction rates go, the price of bonds and bond funds does the opposite. So it was the benchmark FTSE Canada Universe Bond Index that lost 11.7% in 2022, while the S&P TSX Composite Index only lost 5.8%. It looks like 2024 may be a year of falling rates, and with inflation having clocked in at 3.1% annualized for November 2023, down from the 5.9% in January, we are looking optimistic at lower inflation and possibly lower interest rates. Bonds have benefited from a lower rate outlook to the extent that the Canada Universe Bond Index was up 6.6% for the year through mid-December in 2023. Expect more substantial gains if the Bank of Canada starts actually reversing the rate hikes of the past 2 years. A 60-40 mix seems a good way to match the potential risks and rewards of stocks with a cushion of bonds in 2024, but feel free to adjust as required. The point is the balanced approach. It's boring and it's back for 2024. The next thing to keep an eye on is the Middle East. The area is constantly unstable and will occasionally flare up. Unless Iran gets involved directly in the Israel-Palestine war, this is very localized and will not affect the rest of the world, and especially not US and Canadian company profits. Wars after an initial market pullback tend not to have the profitability effect on companies and may actually stimulate the economy for bigger wars. The markets come back quickly after the usual fear-based 5% pullback as people realize that profits are not actually affected. Because it is an oil-producing region, the price of oil may remain a little higher than it otherwise would be while the conflict remains hot, and will increase if Iran or other oil producers get involved. The higher oil price would increase inflation, slow the Canadian economy a little, which would still be bad. Some weaker economies could be more impacted, but of course, Canadian oil companies would benefit. I don't see the war having a major impact in 2024, nor do I see peace in the Middle East anytime soon. The next theme for 2024 is oil. So oil is cyclical and its price depends on the economy and where the economy is. The slow economy in China, which faltered in its reopening following COVID, has caused the oil prices to stay relatively low. Oil will continue to be needed for decades to come, and the peak oil demand continues to be about 10 years away. The electric car adoption, despite hopes and predictions, is slowing, and significant government intervention will be required to entice or force people to buy EVs, since they are still significantly more expensive than the equivalent internal combustion engine vehicle. And the technology is not quite there yet. I think the price of oil is going to be somewhere in the 70s, maybe 80s for the majority of 2024. I don't think it's going to get over 100 unless there is some sort of either supply shock due to some escalation in the Middle East or demand changes significantly. My next theme is China. In the longer term, one of the bigger risks to the US and therefore Canada is geopolitical. Along with risks associated with the US conflict with China, the use of trade as a political tool has increased substantially. An escalation in the US conflict with China has been shown to have a greater impact on the supply-demand dynamic, as well as on the theoretical efficiency metric, as the world has become more integrated over time and would disrupt and bridle the economic growth potential. Looking at China and Taiwan, I do not believe there's going to be an invasion. It is militarily very difficult to invade an island that is over 100 kilometers away from their shore, because supplying the troops is very difficult to do by air and would require a boat landing. And it would also require a direct conflict with the US and Japan, which China is not really ready for that direct conflict. I believe, however, that US will continue reshoring or friendshoring production, and global trade growth is going to slow as a result. The price of goods may increase and cause further inflation as goods are made in pricier locations. Chinese real estate issues have reared up in the past with over-leveraged Chinese developers unable to pay their debts. I don't foresee that in 2024, but there could be other surprises. China was cutting interest rates to stimulate the economy, so they are in a different part of the business cycle in 2023 than the rest of the world. And China will have to work pretty hard to stay out of a Chinese recession, which for them could mean only a 1 or 2% GDP growth. The Chinese government interference and the risk of this interference is constant and ongoing for Chinese companies. And this is reflected in Chinese stocks having a lower price because investors are just not willing to pay as much for Chinese stocks because of this risk. And this is going to continue into the near future and definitely into 2024. Being a student of demographics, the decreasing population that China is now facing thanks to its one-child policy years ago is causing difficulties for the Chinese economy, and now they are no longer high growth as a result of this decreasing population. I believe China eventually will be a superpower through trade, but some of the leadership decisions that we've been seeing have been reactionary rather than forward-looking, causing China to look less like a superpower and more like a still developing nation, which is just trying to flex its muscles on the world stage. And saving the best for last, we have a US election year, and that will affect US domestic politics. So if Trump or the Republicans win, there's likely to be trade issues with the world, possibly Canada, and definitely China. That will slow the economy and cause inefficiencies in trade and economics. We have the constant dysfunction of US government and, of course, the constant threats of a shutdown. We're seeing the increasing deficit and debt as US continues to spend money that it doesn't have using debt. More affecting Canada is the NIMBY, not in my backyard approach that the US has for pipelines, which we're hoping to build. And if Trump wins, NATO and Ukraine could be in some serious trouble because some of the support is likely to stop. Those have been my 8 themes for 2024 to keep an eye out on. If you have any other suggestions for themes, I would like to hear them in the comments. And if you have any requests on what you would like me to cover in future videos, please put that in the comment section. If you'd like to get in touch, please reach out on any of these social media channels, and may you have a profitable day.